Click the bell icon to get latest videos from Ekeeda.
Hello friends, we'll be discussing few details about purchase written book. Now just like that we have learned how to prepare a purchase book, there is another book which is very similar to it whereby you call them as purchase written book. Any returns that are coming back from the specific vendor or the buyer, that is when you have to mention or you have to pull down this specific records or this specific book. Let's understand this in detail. So when we speak about purchase return book, we ideally talk about what kind of book we are dealing with. Now, when we talk about purchase book, that means we record all those transactions from where we have purchased certain goods. Similarly, purchase return book refers to all these goods which are purchased, and if there are certain defects in it, we send it back to the vendor, we send it back to the business. And hence, when we talk about these purchase return books, these transactions specifically record all those transactions whereby the purchase have been made on credit and certain part of those goods are being sent back to the buyer or to the sent back to the vendor or business again. Hence, when we talk about any kind of these specifications, purchase return always returns or always refers to transactions which are dealt with purchase on credit, and any defect in such transactions or any defect in those goods rather are being sent back to the vendor or to the seller. Hence, we call these specific transactions to be recorded under the purchase return book. Let's understand few more details on this. We have highlighted certain points here. We'll go down and read out all of these transactions for you. Let's go that and do that then. Now, as it has been highlighted here, it records the transactions whereby the goods are sent back to the supplier. So any supplier, for example, let's take Mr. A is the buyer and Mr. B is the supplier. Mr. B has supplied certain goods to Mr. A and Mr. A found out that one of the consignment is defective. Now, when Mr. A figures that out and sends it back to Mr. B, who is a supplier, he will record all these transactions in his purchase return book. And the same thing will have a dual effect whereby whenever a specific purchase is being sent back to us, that means we have to add up into the stock and we have to make necessary changes in that. But that's a different game altogether. We'll talk about definition and we'll talk about preparation of purchase return book. It is very similar to any kind of purchase book that you prepare, and the pro forma also feels the same. So let's go ahead and understand few more details of purchase return book. It is also known as return outward book. The reason being, purchase, that means you're getting certain stock inside your organization, and purchase return means that you're sending it back, hence return outwards. That's the other book or the other name for that specific purchase return book that we have. Let's figure out few more details on this part. Again, that we speak about purchase return book or any other book as compared to sales book and purchase book, we have to record all the transactions on the net amount of invoice. Hence, when we talk about any discounts being in part of the question, you have to subtract that part and then further write down the net amount. That means you will be given a gross amount. If there are certain adjustments that are supposed to be done like trade discount or anything like that, that has to be subtracted from it, and then the final amount will be recorded in the amount column. Make sure only the final amount is recorded. I'm reiterating this part because you sometimes miss out on recording that thing and the gross amount is mentioned in the specific final column. So make sure there is no error like that. Now, this specific book is maintained because there are certain changes that we might do in any kind of goods. That means if we figure out there are certain defects in the quality of the goods that we are dealing with, we have to send it back because we won't be able to carry our operations with those defective goods. Hence, when we specifically send all those defective goods back to the supplier, this specific book is maintained by them. Similarly, it comes to us also if we are dealing with sales. So sales return is also another part, but that's not the question right now. So the question relates to only purchase return books, and this is when a specific business will sell it back or probably will send all the defective goods back to the supplier, and that's when this specific book will come into the question. Let's go ahead and figure out how the pro forma of this specific purchase return book looks like. Now again we have 5 columns here: date, debit note, description, LF and amount. Date refers to the year and date that we have usually followed in preparation of any kind of book. Debit note refers to the debit note that is created when we prepare any kind of purchase returns. So every time a purchase return is created or the purchase return is supposed to be done, a debit note is prepared by the purchaser and is sent back to the supplier. Similarly, supplier also creates any kind of credit note that is supposed to be done and sent back to the purchaser for the amount of goods that are returned back. So whenever you prepare a purchase return note or purchase return book, there has to be a debit note mentioned in the question. If it is not mentioned, you don't have to mention it down here, or you don't have to pull it down here in the question. You can leave it blank, and hence this specific column isn't a question. The third column being description, whereby you will refer or you will mention all the details of the specifications that has been sent back to the supplier. For example, if 2000 units of certain parts are sent back to the supplier, that will be mentioned here in the description. Last column, or the second last column, first refers to LF, that is the ledger folio, from where the specific transaction has been picked up, and the last column will always refer to the amount column. Make sure this is only the final amount, or the final amount that is recorded after all the necessary adjustments. So we'll just write down certain descriptions here, and then you can go ahead and prepare the illustration part that will be in the next sheet. So this is the basic pro forma of purchase return book. Let's go through the illustration that we have in the next sheet, and then we'll go ahead with the further preparation of that specific illustration. We have details for Mrs. Mack and Company for the year 2019. Now we'll go ahead further with the illustration. That means we'll see what all details have been mentioned and what all entries are supposed to be journalized in that specific purchase return book. Let's go to the first one. This is for the month of August, and hence the first transaction refers to 3rd of August. Let's read out that transaction. In the meantime, you can also note down all these transactions into your book. The 3rd August transaction refers to return goods to MNC Limited, 2 TVs at rupees 50,000 each. That means you have sent out certain items which are worth rupees 50,000 each, and the quantity that has been sent out is 2. On 10th of August, there is another transaction which has been returned to Daya Limited. 10 amount or 10 quantity of goods are sent back, whereby there is another amount which has been mentioned, that is it is at rupees 2,500 each. So 10 DVD players are sent out which are worth rupees 2,500 each. There's another adjustment that is added to the question, whereby there is a trade discount of 20% on it. On 30th August, there is one more transaction where the returned or the amount are returned, or probably the goods are returned back to X Limited, whereby there are refrigerators that are sent out worth rupees 60,000, and there is a trade discount of 10% on it. 5 refrigerators costing 60,000. The total amount is 60,000, that means the gross amount, and there's a trade discount of 10%. Now let's figure out how to prepare the illustration, or probably the format of this specific thing, and then we'll go ahead and post these entries. Now that we have already prepared the illustration pro forma, we'll go ahead and post these entries. As you have seen that I have highlighted under the date column 2019, that means that is something which is related to the year that you are dealing with. Now this specific transactions, or these specific transactions, relate to the month of August, hence we'll be mentioning down in the chronological order. We'll first go with the return transactions of the first time, that means the first transaction. So the first transaction has been recorded 3rd of August. There is a return to MNC Limited for 2 items which is amounting to 50,000. Now that we've prepared the pro forma, we'll first go ahead and enter the details of the transactions which are the first in the chronological order. That means 3rd of August. So we'll mention down this transaction first, and then we'll see how the amount is supposed to be posted. So as we have seen that we have recorded the first transaction on 3rd of August, whereby we have returned to MNC Limited 2 TVs of rupees 50,000 each, which is amounting to 1 lakh is the total amount. So if you can see in the final column, we have mentioned 1 lakh under the amount column itself. Let's go ahead and record the next transactions. So now that we have recorded the second transaction, we'll mention the amount, but before mentioning the amount, we'll do certain calculations on it. We have 10 DVD players which we have returned to Daya Limited, which is amounting to 2,500 each, and there is a trade discount of 20%. So there is a final amount that will be mentioned after deducting trade discount from it. So for 10 DVD players, we have a total of 25,000 that is supposed to be done, or that is supposed to be recorded ideally. But there is a trade discount of 20%. So on 25,000 you have to calculate 20%. Now when you calculate this, just do simple maths. On 25,000, if you calculate 10%, how much will it be? It will be 2,500, correct? Similarly, if you have to calculate 20%, that will be 5,000 in total. So that means you have to subtract 5,000 from it. Out of 25,000, if you have subtracted 5,000 as straight discount, you'll have the final total as 20,000 recorded there. So that means you have to record 20,000 as the balance there. So now that we have recorded the second transaction, we'll go ahead and record the third transaction for your reference. Let's go ahead and record that part, and we'll be able to finalize what is the total of purchase return book. So now that we have recorded the last transaction as well, that is for 30th of August, whereby we have mentioned that we have sent or returned back to X Limited goods, or 5 refrigerators rather, which is amounting to 60,000. But however, there is a 10% discount that is available, or that is made there. That means on 60,000, 10%, that is 6,000, will be subtracted from 60,000, and the final total of 54,000 will be recorded there. We'll go ahead and finalize the total now, and that will be the closure of this specific book. So that means for Messrs. Mack and Company, there has been a total of 1,74,000 purchase return that has been done, and that has been recorded into the purchase return book in the month of August 2019. So this is how you prepare the purchase return book. I hope this is very easy and simple to understand, and it will be very easy when you practice more illustrations on this. So thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.